Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thanks very much for tuning in to my video today, and as usual, please don't forget to like this video and subscribe to my channel. It does really help me to spread the reach further. So first of all, thank you to all of my new copiers. We're currently at about 1,920. We're getting very close to 2,000. So we are having a growing community of buzzing bees. I really appreciate all of you, and also appreciate all of my loyal old copiers that have been with me for a long time. I really appreciate your loyalty and your support. So thanks very much. So today's video, I'm going to be talking about what happened in the markets last week. And I'm also going to be talking about how our portfolio fared overall. So just to start it off, it was a little bit of a difficult week last week. But I'm determined to always report to you whether there is rain or whether there is sunshine. And last week, unfortunately, there was a little bit of rain. So what happened last week in our portfolio is there was quite a lot of weakness in crypto overall. There was also some difficult earning reports such as Alibaba. Last week, there was some difficulty overall in cryptocurrency, and Bitcoin did come off its all-time highs and fall below 60,000. And this was mainly to do with a very large leverage purge, which I will talk to you a bit about later in the video. I tried to mitigate this as much as I possibly can. And what I did was I conducted many short-term trades which are designed really to try to reduce and soften the effects of downward volatility during these times. So I took many short-term positions and I sold them off at a profit. And last week I happened to do about 4 of those positions, which, although we were still down for the week, did help to offset some of these losses. So it's something I will continue to do, because I do not want to sell our core positions, because if I sell our core positions, I do cut off further growth. And what I do is I trim those crypto positions during times of strength, such as all-time highs, which does help during these downward volatility times to minimize some of those losses. I did mention in our video last week that there could be some volatility on the horizon, but it's not something I worry about too much. And the reason why is when Bitcoin and cryptocurrencies hit their all-time highs, there's often a pullback because there is a lot of leverage in the system, and sometimes the market needs to kind of cool down a little bit before the next leg up. But during bull markets, what we usually see is dips, but they are usually shorter term in duration. So I'm expecting a good recovery over the next couple of weeks. So it's nothing to be anxious about. Volatility in crypto is not a bug. It's a feature overall. As long as I try to mitigate some of that volatility as much as I can during the difficult times. The volatility is what has allowed us to have really great results within 2020 and 2021. And it's something that I will continue to embrace whilst keeping it under control. So as we move on to our global weekly market update, and I will start off with the US. Last week was a very mixed week overall for the US stock market, and the S&P 500 was up about 0.3% for the week, and the Nasdaq was up about 1.2% overall for the week. And our portfolio did suffer somewhat, as I said at the beginning of this video, and this was mainly attributed to the downturn in crypto overall, and also some earnings reports such as Alibaba, which showed results which were weaker than expected. Overall, I think our portfolio is well set up to have a really great end to 2021. So I wouldn't worry too much about an individual week, especially if you are a new copier, and it's very important to think longer term, and our portfolio is designed in order to be able to succeed in the long term by taking advantage of key macroeconomic trends. Last week, growth stocks outperformed value stocks, and I think a large reason for that is that investors are expecting lower interest rates for longer, which is generally very good overall for growth stocks. We saw some good results overall from Tesla as well as Apple and Amazon. However, energy stocks were comparatively weaker last week, and that is because both China and the US were both having discussions about unlocking their strategic petroleum reserves, and it looks very positive and very likely that they are going to draw upon some of those strategic petroleum reserves. There was also discussions with Japan and Korea. However, it was discussed that it was very unlikely that those countries would go into the strategic petroleum reserves just because the prices of energy are going up. They would have to see a real energy shortage before they did that. One of the reasons why the US stock market was generally positive last week was because there was a lot of good data that was released from the US. And one of those data points was that retail sales had grown by 1.7% in October, which is the highest data that's been released since March 2021. So it's showing good signs that Americans are spending more money on retail. Data also showed that industrial production actually increased to 1.7% against expectations of 0.6%. So we're also seeing good growth in industrial production overall. Another key talking point in the US was whether Jerome Powell, the chair of the Federal Reserve, was going to be renominated by President Biden to continue in his position. There was also another candidate called Brainard who has also been tipped to be nominated, and he generally has a more dovish fiscal policy, even more so than Jerome Powell. And this actually caused financial shares last week to lag because they generally do a lot better in higher interest rate environments. As we move on to Europe now, and last week was generally very mixed overall for European indices, and a lot of the reason for this was that there's been a lot of anxiety around the increased number of cases in Europe for COVID-19, and this has caused many governments within Europe to actually put in place much stricter regulations around COVID-19. So we have seen both Austria and the Netherlands re-implement a lockdown in place for its citizens, as well as Germany, which has introduced a three-step process on toughening COVID controls. And also we have seen Ireland and Belgium, which are both now mandating that people wear masks again in indoor environments. And the UK is also ramping up its booster program. There was also key data released in the UK that inflation had actually reached 4.2%, which was actually a decade high. And this had increased from the 3.7% for the month previously. So this is again another signal that inflation is rising very quickly around the world, and a lot of the reasons for this is higher commodity prices as well as some of those bottlenecks in the supply chain. However, there was some good employment data, and this actually showed that another 160,000 paid jobs had been created in the UK economy, taking that up to about 29.3 million overall for the UK population. Another key data point released in Europe was that new car registrations have actually decreased by 30.3% overall for October. And again, this is to do with the semiconductor chip shortage overall in car manufacturing, which has really seen a reduction in the number of new cars that are being made around the world, and this is now being shown in the car registration data. The head of the ECB, Christine Lagarde, also played down fears that interest rates would rise in 2022, and she said it was very unlikely in this current environment. She also said that although inflation was high, it was likely to fade over time, and the ECB is likely to continue the pandemic purchasing program for much longer. So as we move on to China now, and last week again was a very mixed week overall for the Chinese economy. And one of the reasons was that Alibaba actually released their earnings report. And as expected, it was a very difficult quarter overall for Alibaba, as they missed out on revenue expectations and they also lowered their guidance. But this wasn't unexpected, especially because of the clampdown that's been in place by the Chinese government on Chinese internet companies, and also the COVID-19, which has had a heavy burden overall on the Chinese economy. However, I expect things to get a lot better in 2022, and I'm very happy to have Alibaba as a small part of our overall portfolio, and I expect it to do very well in 2022. As I've been mentioning in previous videos, that the Chinese economy has been struggling a lot recently, mainly because of the property sector in China. And there was some negative data that was released last week from China, which showed that both new and resold homes in China had decreased by 21.2% in October from September. So this is really showing that the property sector in China is starting to become very frail, and there is a lot of unoccupied properties within China, and also a lot of properties that have already started the construction but haven't got the funding at the moment to be able to complete those projects. And we are starting to see those now in the data. Last week, we saw some of the very large property development companies in China try to reduce some of their debt burden by raising financing. And the Agile Group actually raised over 310 million in notes. And also the Evergrande Group, who are very heavily indebted and which we've talked about previously, have actually sold a subsidiary of the Evergrande Group called the Hengtan Group in order to be able to relieve some of that debt burden that they had. Another major organization in China that's had a lot of debt issues recently is the China Huarong Asset Management Group, and they have actually said that they are going to try and dispose of $6 billion worth of assets, and it's very likely that the Chinese government are going to try to help them dispose of these assets to companies throughout China. As we move on to the top 3 performing stocks of last week, and the top performing stock of last week was the 𝘃𝗶𝗃𝗀𝗃 Group, which was up about 22.3% last week on the back of a very good earnings report. The second best performing stock in our portfolio last week was Micron Technologies, which was up about 7.4% last week. And the third best performing stock was Apple, which was up about 7% overall last week. As we move on to crypto now, and last week was a very difficult week overall for crypto, and especially Bitcoin, as Bitcoin went over the $60,000 mark for the first time in many weeks. And there's lots of different reasons why Bitcoin went under the $60,000 mark. And one of those was the fact that a lot of leverage was purged out of the system. So in total, on Tuesday and Wednesday, there was over $970 million worth of Bitcoin, which were liquidated from those who were long Bitcoin and were using excessive leverage. And what happens is, as the price goes down, people with high leverage, they start to get liquidated. And then this cascades down to other leverage buyers with less leverage. What you see is these kind of sharp drops in the Bitcoin price. And that's what we saw kind of mid last week. And Bitcoin now is sitting at quite a critical juncture. It's about 58,000. And it's kind of retesting that 60,000. And then a couple of times it's kind of broke below the 58,000 range. And I think it's nothing really to worry about. And I think we've seen this many times overall in the Bitcoin market, especially when we hit all-time highs. It's very natural for it to drop off a bit and for us to have a reduction in the Bitcoin price as the market starts to cool. So it's not something I'm very worried about, and I still expect us to have a really explosive end to 2021. And I think that the price will continue to go from strength to strength. Some other reasons why it may have dropped as well is I think there's still a lot of hangover, I think, from the VanEck physical spot ETF that I've been talking about previously in my videos, and that got rejected about 10 days ago now. However, the VanEck futures Bitcoin ETF was approved several weeks ago, but that's actually only started to go live last week. And that would be quite interesting to watch as well, because the VanEck Spot Futures ETF actually has the lowest fee structure. So you might see a lot of people starting to use that ETF instrument as well. We've also seen some big moves in terms of crypto exchanges, sponsorships and funding. And first of all, crypto.com, which is one of the largest crypto exchanges, have decided to sponsor the stadium which was formerly known as the Staples Center in Los Angeles, which houses some of the largest NBA teams and also NHL hockey teams. And this is really important sponsorship because it really helps to put crypto on the map and really gives crypto that kind of mass, broad appeal to the general public all over the world. So this is really great exposure for crypto. And I also think it will be pretty good for their native token as well. The other news as well from exchanges is that Binance US, there was an interview with 𝘃𝗶𝗃𝗀𝗃 last week, who's the CEO of Binance, and he said that they're going to potentially start to raise over $200 million for the future growth of the Binance platform in the US. So this is also good news for a healthy all-round ecosystem in the US and around the world. Jack Dorsey, the CEO of Square, outlined his plan by releasing a white paper which states that they plan to set up a decentralized Bitcoin exchange. And this is a very interesting development because it will be implemented on the Lightning Network. And this kind of helps us to move away from the centralized exchanges to a more decentralized exchange world. El Salvador, which is the first country in the world to accept Bitcoin as legal tender in the country, announced plans last week to set up something called the Bitcoin City, which is going to be run entirely on Bitcoin. And within that Bitcoin City, that's going to be paid for by setting up something called a volcano bond. And the proceeds from that bond offering will be used to not only build the Bitcoin City, but will also be able to be used for other services in the country, such as garbage collection and the infrastructure that's needed to run that city completely. And that means that there will be no need for VAT, or there'll be no need for income tax on citizens within that Bitcoin City. So it's very exciting, and we could see this as a future model for other countries. Thank you very much for listening to my video today, and don't forget to join my Discord Bees community group, where we have regular, really great discussions on investing, and I very regularly answer questions on the Discord group. So I will leave a link below. And if you are a new copier or an existing copier, I also recommend for you to take a dollar cost averaging approach when copying me as an investor. I think that this helps to smooth out the average buying cost of your positions, and this helps you over the long term to have not only a saving mentality but also an investing mentality in order to be able to make compounding returns in the future. So thank you very much for listening, and have a good week ahead.